Buddy, it's Brian Shannon from Alphatrends.net. Today's Friday, the 8th of December, 2817. Hope you had a good week of trading here. It was kind of mixed for the markets, but really more about recovering from some recent weakness that we saw. So let's take a look at the action. The S&P 500, we're starting with a 15-minute chart here. This 130 period moving average is equal to 5 days. So the volume-weighted average price for the week, we can see we started out with this gap higher on Monday, and then we saw profit taking come in, and we held underneath that volume weighted average price right up through the close on Thursday. Today, of course, we had a gap higher above that 5 day moving average and finished pretty much right at the highs for the day. So when we back it up a little bit to a 65-minute time frame, we can see some important levels such as the volume weighted average price from this gap continues to hold on an intraday basis as support after we tested the volume weighted average price from the ABC News, Trump News right here was tested. That's when we tested this November, mid-November low, that is. So heading into next week, we remain in a bullish uptrend. The daily time frame, of course, we're above a rising 10, 20, 50-day moving average. We're also above the 100, the 150, and the 200-day moving average. So we remain in a bull market. There's nothing here to suggest that pullbacks are anything other than that. That is just pullbacks, not something to end a trend. So the first place we'll want to see hold is support next week. If we see some pullback, it's really 264 to 264 and a quarter. If we break below that, then we'll have to reconsider some of our near-term levels, but that's something that I do each and every day for subscribers, along with providing the low-risk, high-probability stock setups. The NASDAQ for the week, you can see here, here's where we started the week out. The volume-weighted average price kind of just chopping back and forth. We were under this declining 5 day moving average, which gave us reason to be a little bit cautious in here, but the bigger levels that we did hold, we can see on, for instance, this 130-minute time frame. When we look here, we came down to this 152 level that's been prior support. We were looking for this volume weighted average price to hold as support, as it had numerous times, but it kind of chopped around in there. At the end of the week, though, we are back above the 5 day moving average, the week to date volume weighted average price, and it looks to me like we got a perfect little pullback here today to set us up for a break higher next week. That is, we gapped up and we sold off in here. But this sell-off today, that is from the peak, came down and held at the highs for the last couple days. That is, held above these little highs for the week that we had seen earlier. And now we can be in a position for a push back above this little band of resistance here, and most likely continue on to new all-time high territory. If we get up into that area and we start to see some more choppy action, of course, then this is suggesting perhaps we need further time to correct. But again, with the market in a primary uptrend, the tendency is to continue in the direction of the primary trend, which of course is higher. The Russell 2000, this market, you can see we're kind of stuck between the 10 and 20-day moving average here in the daily time frame. We did hold on a closing basis above this prior band of resistance and that 20-day moving average, so that's good to see. When we look at the 65-minute time frame, the volume weighted average price off of this prior November low, we undercut that, and we're still able, though, to hold above the prior resistance. So it's not always just about the volume weighted average price, but using it in conjunction with other technical analysis. I've always said that I think the volume weighted average price is the perfect combination of price, volume, and time, because it gives us the sentiment from any particular point where we choose to measure from. And it doesn't tell us necessarily exactly buy here or sell there. It tells us here's where to become more interested, look at shorter term time frames, and maybe be cautious, as we were with this market still below the declining 5 day moving average. To me, it's just a pullback within a primary uptrend. I expect that we will see this market in the near term back up near new highs, but for now, with it below the 5 day moving average, just a little bit of caution going into next week. And I would only be concerned if we were to break break below and hold below the 50-day moving average at this point, which is that green moving average. Semiconductors, this group, we saw a little bit of a bounce in here, but it continues to see some volatility overall. Here's let's go back. This is our week to date volume weighted average price. You can see we closed pretty much right on that, saying that, the average price that business was transacted at in the semiconductors, SMH, was $98. So the advantage neither going to the bulls or bears, which is good because it shows that we were consolidating after the recent bout of weakness that we've seen. So on here, I've got a 100 period moving average, which is equal to the 50-day because we're looking at 195-minute chart. So where there's 390 minutes in a day, if you divide that by 2, you get 195. So because we cut our time in half, we double the moving average, and that is essentially the 50-day moving average, just looking at 2 candles instead of 1 for each day. Here's our volume weighted average price from the August lows. We continue to hold that. I think that we will continue to hold that, and that will be an important level. The 50-day moving average is rising. The 5-day moving average is flattening out. So I think that next week is likely to see that this market does recover further, perhaps up towards that 20-day moving average. The biotechs have been a mess this week, just a big mess of volatility. The volume weighted average price year to date, we've mentioned numerous times, came close to being tested once again. We've got a declining 50-day moving average. So we have mixed messages in this market. And mixed messages simply mean there's no advantage to buying or selling, not from an intermediate term perspective. So it's a market that's best left alone. I hope you had a good week of trading. That's going to wrap it up for me for today, and I'll talk to you next week. Thank you.